Welcome to your Option Source Stock Outlook. This is Patrick Ceresna. First stock I want to cover is Apple, and this morning we see a bullish breakout candle that may be the beginning of a new trend move. It's very early to be able to see whether or not it has any follow through, but it is at least a technical signal to observe. The obstacle with trading Apple to the upside here off the $129 level is the fact that there's substantial overhead resistance approaching all these previous highs, including that very big bearish engulfing candle that came in off of what was a very bullish earnings announcement. This means that Apple will meet some sort of heavy overhead resistance as it attempts to break out. It doesn't mean it won't break out, but traders need to really see a follow through to an all-time new high to really have any reasonable risk-reward proposition of going long Apple here. Next stock I want to take a look at is Facebook, and very bullish breakout on the upside, and once the technical level was beat, the stock just accelerated to the upside. The question is, how much more room is there for Facebook to go? All of our technical measured moves suggested a rise to the $90 area, but we find ourselves within 2-3 days already approaching the target. The one thing here is that with such degree of momentum over the last 3 days, there is actually a chance that Facebook may try to do a bigger move beyond just a shorter term technical rise, and therefore if we saw a very traditional Facebook rally, which in the past few years has been about a $25 rise, we could see off that 75 low a potential push towards the 100 mark on Facebook. We're not trying to endorse the purchasing of Facebook up here looking for a rise to 100, but we're simply observing the fact that the momentum rising to the $90 target is a lot of strength that it isn't going to fizzle out very quickly unless there's a news catalyst. So we're going to watch how Facebook behaves along the $90 mark. Finally, I want to take a look at Netflix, and Netflix has been in a very epic rise, starting with a big push from April off the $400 mark, and now seeing the $700 level being openly tested. If one was to look at a weekly chart, looking at a much bigger picture one of this Netflix chart, there would have been a measured move that targeted the $650 to $750 area. Now that Netflix is already within the weekly chart measured move target zones, while certainly Netflix has the upside potential to even rise a further $50, at some juncture the risk reward has substantially diminished as the easy money, as the rise from 300 to 700 has already been made, and traders at this point looking for the last $50 rise are meeting an increasing amount of risk of a retracement or pullback that Netflix is notorious for. At this stage, the short-term momentum can be traded higher, but be aware that at some juncture this rally is going to fizzle out. That was your Option Source Stock Outlook.